Welcome back to Investing Talk podcast.
Good to be back.
Today, we're looking into a company requested by a listener, Wearable Devices. That's WLDS.
Ah, yes, wearable devices. We've got quite a bit of material you sent over.
We do reports, news snippets. The goal is really to unpack all this for you, pull out the key insights on the company, and figure out its potential.
And the information is pretty varied. There's a due diligence report from, April 2025?
Looks like it, and then much more recent stuff, too.
Right. Updates on product launches, awards they've won, and that pretty significant stock price surge recently.
So we'll dig into the company itself, its financials, how it stacks up against competitors, future outlook, all based on what you've given us.
Sounds good. Where should we start?
Let's begin with the basics. What exactly does Wearable Devices do?
Okay, so they're based in Israel, Yokneam Illit.
And their focus is
Non-invasive neural input interfaces. That's
Yeah.
the core technology.
non-invasive neural input. What does that mean in practice? What are the products?
Their main products are things like the Mudra development kits, the Mudra Band, and Mudra Link.
Mudra. Okay.
And what these do essentially is allow you to control digital devices. Think your smartphone, smartwatch, AR, VR, headsets, that sort of thing,
Control them how?
using subtle, touchless finger movements. Gestures. Your brain sends the signal, their tech reads it near the wrist, even before you really make a big movement.
Interesting. So very fine motor control detected neurally.
Kind of, yeah. It's in the tech hardware sector, obviously,
Yeah.
but focus on these, pretty innovative wearable solutions.
And they've had some developments recently, right?
They have launched an update for Mudra Link. It's got something called a gesture mapper now.
Gesture mapper, meaning you can customize the gestures.
Pretty much. Assign specific commands to the gestures you want to use.
That makes sense for personalization. Anything else?
They also got a U.S. patent granted. It's for a device that uses both gesture and voice control.
Oh, integrating voice, too.
Yeah, and it uses AI to manage that touchless interaction. So building out their IP portfolio.
And patents are always important in tech.
Definitely. Plus, they won an award. Best Wearable Debut at MWC 2025.
MWC Mobile World Congress. That's a big deal.
It is. And look who they were up against. Lenovo, Samsung, Intel. Big names.
So getting recognition alongside major players, that must have felt good for them.
You'd think so. And it seems like the market noticed, too.
Ah, the stock price. You mentioned a surge.
A significant one.
Yeah.
Late April 2025, the reports you sent showed jumps of 70.83% in one update
70%. Wow.
and 55.01% in another. So some serious upward movement.
That kind of jump suggests pretty strong positive sentiment, doesn't it?
It certainly points that way. Likely driven by those product updates, the patent news, the award. It builds confidence.
But it's important to remember the context here. They listed on Nasdaq Capital Market. When was it?
September 2022, and the market cap reported here is around $1.667 million.
That's quite small. Microcap territory, really.
It is, and with a small number of shares outstanding, that often means
Volatility. Big price swings are more common, and liquidity can be an issue.
precisely. Fewer shares trading means it can be harder to buy or sell large amounts without moving the price significantly yourself. So that surge, while positive, needs that context.
Okay, let's pivot to that financial health. What do we know as of that April 2025 report?
Well, we know they announced their full year 2024 revenue figures back on March 19th, 2025.
But the specific numbers aren't in these snippets you sent.
No. For that, you'd really need to check their official annual report, the 10K filing.
Okay. But the reports do mention strategic investments.
Yes, in R&D and also in building B2B partnerships, business to business.
Which suggests they're focused on growth, on scaling up operations, probably looking beyond 2024.
That seems to be the strategy, investing now for future scale. It also implies they might be prioritizing that long-term growth over showing immediate profits.
Makes sense for a tech company in this space. And the Mudra Link launch shipments started Q1 2025.
Correct, so that could potentially start driving some near-term revenue.
What about earnings per share, EPS?
Not reported publicly recently in these sources, and frankly, it's likely negative.
Which isn't unusual for a growth stage tech company investing heavily.
Not at all. And that explains why there's no PE ratio listed. Can't calculate it with negative earnings.
Right. So comparing it to the industry average for profitable peers like 25x to 40x isn't really meaningful right now.
Not yet. We also don't have specifics on debt to equity or free cash flow from these snippets.
Though we can probably guess about free cash flow.
You'd anticipate it being negative given the spending on R&D and marketing to launch new products.
And return on equity, ROE.
Also likely negative. Benchmarking against maybe Critral Labs or NextMind, if you could get data on those emerging AI wearable competitors, might be more useful than comparing to Fitbit or Garmin.
So drilling down on their position, what's their competitive advantage?
It really comes back to that proprietary neural interface tech, the Mudra Band, MudraLink.
And they got that CES 2025 Innovation Award validation, too.
That helps validate the novelty, for sure. Market-wise, they're positioned as sort of a niche challenger.
Targeting Apple Watch users specifically, and B2B partnerships.
That seemed to be the focus. They're not trying to be the next Apple or Samsung directly, more like offering a unique add-on or integrated solution.
And industry trends seem favorable. Touchless controls, AR/VR integration.
Yes, the demand for those things is growing. Plus, enterprise adoption of gesture interfaces. These trends could definitely work in their favor.
But there are risks too, obviously.
Always. Rapid tech obsolescence is a big one in wearables. And reliance on third-party platforms.
Like needing to stay compatible with future versions of the Apple Watch, for example.
Exactly. That dependency is a risk factor.
What about management? Who's leading the company?
The CEO mentioned is Asher Dahan, and it seems he's been steering this strategic shift towards B2B collaborations since at least 2024.
With that emphasis on R&D investment over short-term profit.
That's the picture painted here, a focus on the long game, on innovation. Typical for tech startups, but it requires investor patience.
Okay, let's summarize some potential red flags and strengths. Red flags first.
The small market cap and limited liquidity we talked about. That leads to volatility, higher risk.
And maybe the reliance on a very specific niche technology if market adoption is slow.
That could be a problem, yes. It's a focused bet.
But on the flip side, the strengths.
That innovative neural interface approach is definitely a unique selling point. It's different.
And the fact their products could potentially work with a wide range of devices.
Right. That broad applicability could attract interest from major consumer electronics companies down the line. That's the potential upside.
Let's talk competition again briefly. Neuralink was mentioned.
Yes, but as the source notes, Neuralink is doing invasive brain implants. Very different approach.
Totally different. And Fitbit, Garmin.
They're huge in wearables, but focus primarily on fitness and health tracking, not really direct competitors on the neural interface front.
So wearable devices non-invasive tech really does carve out its own space, for now at least.
It seems that way. It's their key differentiator.
Looking ahead then, what are the potential catalysts? What could drive things forward?
New product launches, obviously. But the big one would likely be partnerships.
Landing a deal with a major consumer electronics brand.
That could be transformative for a company this size.
And the potential risks looking forward.
Regulatory hurdles are always a possibility with new tech interfacing with the body. Increased competition, maybe from unexpected places.
And fundamentally, just getting widespread adoption. People need to actually want and use this tech.
Absolutely. Success hinges on scaling the products effectively and making them integrate seamlessly. It needs to just work.
One of the sources you sent included a kind of summary recommendation, right, from around April 2025.
It did. It basically called wearable devices a speculative play.
Speculative because of the innovative tech, but also the small size and risk profile.
That's a gist. Unique products, but the stock volatility and limited liquidity mean higher risk.
So the recommendation then was cautious.
Cautious hold, or maybe a speculative buy if you have a high risk tolerance and are specifically interested in emerging tech.
With a strong emphasis on monitoring developments.
Crucially important, watching future results and news closely.
Okay, so pulling all this together, wearable devices seems like a fascinating case.
It really does. You've got this genuinely innovative technology. It's gaining recognition awards. That stock price jump.
But there's always a but, isn't there?
Yeah, often is. As a smaller player in a super fast-moving sector, there are clear risks.
Especially around the financials, which are still in that investment phase, and market adoption. Will people actually buy this stuff in large numbers?
Those are the key uncertainties. So for you, the listener who asked, it's really going to be about keeping a close watch.
Monitoring their financial reports when they come out.
Any news about partnerships, product integrations.
And just how the whole market for wearable neural interfaces evolves. Is it taking off or staying niche?
Right. The info you sent gives us a good snapshot, but in a dynamic space like this, you need continuous monitoring. Things change fast.
So what's the main takeaway for you from all this? Does anything particularly stand out?
For me, it's that classic high-risk, high-potential reward profile often seen with disruptive tech startups. The tech sounds impressive, but the path to large-scale commercial success is still uncertain.
A fair assessment. Hopefully, this overview gives you a clearer picture and some specific things to track going forward. Do your own further digging based on this.
And if you found this breakdown useful, please do subscribe, like, and perhaps leave a comment. It really helps us know what kind of analysis you find valuable.
It does indeed, and maybe something to think about. As this kind of touchless control gets more common, more integrated, what other applications might pop up? Things we haven't even thought of yet for this kind of neural interface technology.